Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hey everyone, so checking in on the MJ sector. As we know, we're in a very clear downtrend. The videos over the past few weeks have shown that and shown weed to be one of the leaders to the downside. So what we have been doing is just patiently waiting, staying in cash ideally unless we're truly long and not caring about the day-to-day action, but waiting for opportunities like we saw yesterday. So what we had play out, the last video I did, let's see, that was back here right before we hit lower lows. So we started the week hitting lower lows. Obviously that tells us the bears are still in full control. We see a new move to the downside. We see increasing bear volume on the way down. That shows a lot of bear momentum. And we saw 5 red days in a row before we saw the gap down open. Now, what was the signal to get in for a bounce? Everybody who's been watching this video, these videos, hopefully knows gap downs are for buying, especially at a climax like this. This was a climax where the volume, we saw the highest bear volume that we had seen in weeks. We saw a close at the low of the day. We saw 5 red days in a row, and then a gap down open. That's when we start looking for a bounce. That's when we get in for a short-term trade. Now, we were looking for an entry. We set a low at 750. Throughout the morning, I was on live webcam and saying, you know, 750, the bulls need to hold this level. Once 750 broke, even then I said I would not be a seller down at this level. And that's because we were so extended to the downside that selling then, you're better off just waiting a few days, and very confident within a few days we'd be back to that level at the longest. And obviously it played out that day. And big-time gains to the upside. Now, what are gap ups for? Especially after such an extended move to the upside. On this bounce, we're not looking to change any trend. We know that we're nowhere near changing a trend. We're going to have to establish higher lows and higher highs for that to begin playing out. So this bounce coming directly off the low, we are anticipating a lower high being set on this move. So we saw the gap up open, profit taking, really nice gains in 2 days. People want those gains. Gains have not been around for the bulls anytime often in the past 2 months. Look at this chart. How many times have we seen 2 strong green days in a row? I'm visually just looking here and I'm seeing 1 time. That is pretty astounding and clearly tells us the bears are in absolute full control. So we didn't even confirm the bullish reversal candlestick. We had a huge bullish reversal candlestick, no confirmation. So now we're right back to watching support. The bulls have to form a higher low compared to 737 and try and then break to a higher high. Our new resistance level is 883. The weekly time frame right off the 50-week moving average support of 741. We broke the low of the dump on the reaction to the euphoria, hitting the all-time high. That's very significant, and it's not a good sign. That was 765 support. Why is that not a good sign? Because we now have a lower high and a lower low. We no longer have a higher low pattern here on the weekly time frame. Granted, we closed above 765, keeping that support, but obviously this is not a good week for the bulls. So the 50-week moving average support is now key. WEED's chart is shifting. The momentum is shifting, and we need to be cautious here. We have a lot of time left in this summer, in the fall, in the winter, while we wait for 2018, and shorts know that. Shorts know that catalysts are few and far between before we head into legalization, and they are capitalizing on it. Anybody who's gone short in the past 2 months, 3 months, has made some decent money to the downside. So I personally would never short this sector. That's just me. But there are people out there who are and who are making money. So the new 50-week moving average support is a level to watch. We've got 737 as the must-hold support. And the bears are in absolute full control of this sector. APH, same story. Lower highs and lower lows. We broke to a lower low on Wednesday. That was an indication of weakness. Increasing bear volume. Gap down. Little dump. Climax to the downside. Bulls buying the dip. Little gap up open. No follow through. So our support is 528. Our new resistance is 629. And we need a higher low compared to 528 to indicate that the bulls have formed a higher low, and we have not seen a higher low in a long time in this sector. Weekly time frame is a much different shape. This is why APH is technically the sector leader, and that is because look at all the higher lows we still have. We have the low on the dump from the reaction to the previous all-time high. That was 405, and we are holding that level. We held 406. Now we have a higher low of 502, and now a higher low of 528. So we are over 25% higher than that low from the pullback in November. And obviously, weed has broken that level. So that shows you how significantly different those two charts are. So bulls bought the dip. This is a bullish reversal hammer on the weekly time frame, even though we didn't see follow through on the daily time frame. Bulls need a green week next week to confirm this reversal candlestick and be looking for a potential move back to the upside. We also have an all-time high as well. We got a new higher high. So whereas weed's weekly chart is now a lower high and a lower low, APH is higher lows and higher highs still remaining intact. ACB, very muted compared to APH and WEED. Didn't see anywhere near all this action. We did see a pullback. We are still seeing lower highs and lower lows, but the trading volatility was not there, and no follow through for the bulls. And watching support now of 240 and new resistance of 257, a double top the past 2 days. Weekly time frame still in control here. Anything above 221 favors those bulls to remain in control, so that is a key level going forward. And this chart still looks better than WEED as well because of these higher lows remaining, keeping those bulls in control. OGI, also very muted, not a lot of volatility. Certainly the trading is going on in WEED and APH. There's day trading, there's more volume. So we're holding the 200-day moving average support of 248. We still have a lower high pattern where we have resistance at 289 and 273. And the 200-day support is 248. That's a must-hold level. Lose that level, and the bears will take control. And on the weekly time frame for OGI, same thing. We have our low established, and now the bulls are trying to form a higher low. And 242 is a key support as well. 50-week moving average, we've already bounced off that twice. So that was maybe a potential clue where OGI held its 50-week moving average support. And now WEED is holding its 50-week moving average as support. APH is well above that level. It's not even in the picture at this point. And ACB doesn't even have one yet due to the shift over here to the and lack of price history. So now we're on to EMC. EMC has been a much stronger bear due to the all-time low, and we had support at 205, and we bounced off of 210, and same story, no follow-through, and the bear is still in full control. The weekly time frame trying to form this higher low now. We can be looking at a bottom fishing play where we're absolutely out as bulls if we do break 205 support, but we now have a higher low at 210. It's a bullish reversal hammer here as well, so we need a green week next week to confirm that our higher low has been established and that the bulls are going to try and show back up and see a green week for follow-through. HMMJ is a good gauge for the sector overall, and we can see since April, it's been nothing but lower highs and lower lows, and we've only seen 2 green days in a row once. We've seen 4 green days in this instrument in the past 5 weeks. That is extremely bearish. So we have a new resistance at 972. We have support down at 912, and then no support due to lack of price history. And we look at the weekly time frame. That is an ugly chart, and the bulls are just trying to establish a level of support that's going to hold. And as of right now, that has to be 912. We have nothing else to be watching. So as far as the weekly charts are confirmed as to who looks the best in terms of trying to confirm a bullish reversal candlestick, I am looking at APH as a leader with a bullish reversal hammer, and we're also going to be looking at EMC on the weekly, also with a bullish reversal hammer. Those two are the strongest weekly candlesticks, looking for some potential continuation into next week. But again, we have to establish a higher low on those daily time frames and then see a higher high. So that's what we're looking for on every single name in this sector. Break the lower high pattern, and in order for that to happen, we have to form a higher low, step number 1, and then try and break the lower high pattern. We're not going to do it just coming off of a new lower low like we just saw on this all-out dump. So I appreciate you watching. Hopefully some people out there were nimble and getting in and out of some trades quickly. Shout out to some of our members. Dinsey in the chat room made an entry at 741. And not sure if she sold her position. I'm sure she was likely a seller today, but either way, she's well in the profit either way. And that's due to patience and waiting for a signal. We're not just buying because things are beat up. We're not just buying because it's eventually going to go up. We're waiting for signals that are going to make us profitable in our trades right out of the get-go. So I appreciate you watching. We'll check back in next week, and have a great rest of your weekend.